Hello, everyone. This is Doug Davis, broker in charge at Corimbi Realty, and here with another Ask Doug. And if you're enjoying these, please give me a thumbs up, or better yet, subscribe. It helps me a lot, so thank you for that. And today, um, wanted to talk about zombie mortgages or problems with mortgages that haven't been released, um, and especially at a critical time when you're trying to sell the property and uh, either the loan is not discovered or it is discovered and you don't have a release of mortgage. Okay, so let's take a step back and find out what this is about. So when, for example, when you sell a property, the title and escrow company is supposed to find all liens and encumbrances and do prorations for maintenance fees and AOA charges and um, prorate your real property taxes, maintenance fees, maybe even insurance or rents. And you get a closing statement and it all goes on there. And hopefully all the mortgages from a buyer's point of view will be paid off and not rear their ugly head after closing. At that point, you may have to invoke your title insurance, which you hopefully obtained when you did your conveyance. So, okay, so zombie mortgages are um, mortgages that were during the COVID time period, the banks started to slow down. They were told by the feds to slow down the foreclosures because everyone was in the same sinking boat of our economy, the world economy, just contracting very quickly because of the COVID problem. And so they slowed everyone down. They slowed the foreclosures, and um, house values went down at that point in many markets. And so the lenders just laid off as they were told to do, and then came back later when they found that the properties had appreciated and then sent in their letter demanding payment. Well, hopefully these were recorded and escrow should have caught that. They do ask the sellers to give in writing what their first and second or third loans are, or lines of credit, or any debt that is on the property. Any debt on a property should be recorded, or you're last in line, but that's still debt. So if it's missed by escrow and it comes back, so some buyers may be very surprised to see that they're um, coming after them because it's recorded against the property. And escrow didn't find it. Yikes. There's other things like that. Let's say you do well, it could be a normal loan with a bank or a loan with a family. When you've paid it off, you want to obtain and record a release of mortgage saying that I've paid it in full, it's done, it's over, and don't call me anymore. So you want to get those. So if it's a bank, there is the expectation that they will um, record that release of mortgage form, and future sales and escrows can find that document and see that that's been discharged. It's over with. You do a private loan, then you want to do your own release of mortgage and have it recorded by your escrow company or however it's done in your state. You don't want the, let's say you borrowed money from the parents and then they passed away and then the kids inherit the property and they find a document that says that you had a loan with mom and dad and you don't have a release of mortgage, well, then the other kids are going to say, well, uh, you got to pay up. And you have no way of proving it at this point because the folks passed away. So you want to get your release of mortgage. Um, so yeah, zombie mortgages are usually second mortgages that backed off during COVID and are coming back now, demanding payment of their loan and back pay and interest and all that. So um, hopefully those sorts of things have been discovered prior to recording to a buyer. So there you go. What a terrible thing that would happen to you if that's so. Okay, so that was an interesting little tweak on that. If you have any questions like this, love to hear from you. And if you have real estate needs, buying, selling, or property management, let me know. And until next week, thanks so much.